Well, good morning, traders. This is Blake, and you are listening to the F.A.C.E Show. And wow, what a weekend of movement! And what a what I think the just leftovers of what has happened from Friday into today is just pretty amazing. To be frank, I mean, we obviously, you guys all know the moves that we've seen in silver and gold, and they've had a decent recovery. I'm just showing you like from the lows of 2022, the silver move. I mean, 50% retracement in basically three or four sessions. That is nuts. What a crazy, crazy move. We're going to talk about, what's happening in precious metals, what's next for precious metals. We're going to talk about what's happening in the dollar. Does the dollar, continue to gain strength? Does it start to weaken from here? And what general thoughts are from the team. We've got so much happening this week as far as data goes. With the jobs report coming up, we have ISM manufacturing today. We have the RBA tonight or tomorrow morning in Australia. And then, on top of everything else that's happening. So we're going to get to it. I should say good morning to Michael, Mr. Weissman. Good morning. Domeso, good morning. Ryan, Bran, Ingmar, Laura, K-Man, AJ, Addie, Glenn, good morning. Good morning to everybody. And I'm glad that you all are tuning in, whether you're tuning in through, YouTube or through X or right directly through Zoom. Glad to have you all here. So let's start, and I want to actually just take a look at the dollar index really quick. The thing about the dollar is it's up this morning. The euros. Yeah, I mean the euro's down 10 pips from where it closed. I mean, we're basically at the lows of the session right now in the euro, but we haven't really gone anywhere. It looks like we're going to press into new lows here in a moment. But let's keep in mind that the dollar index is still below the 14-year trend line, that broken trend line. It's below it. I know it looks very messy right here, but we are still technically below it. But we are hitting new lows. Actually, as I speak, that means the dollar index is hitting new highs. We're hitting new lows in the euro. I'm sorry, I should mention that. But yeah, the euro's hitting new lows. We're like right on what I would say is flag support around the 50% retracement, and we pretty much just filled that gap from the Greenland comments. So I'm gonna ask Ryan really quick, because there's a big debate going on as far as the dollar goes. Did the dollar positioning? Let's talk about positioning. First of all, we know that the market came into last week really bearish the dollar. I mean, the euro pushed above 120, stopped anybody who was short above 120 when Trump had those comments in Iowa about the dollar and not caring that it was weak. So that really wiped out anybody who was short. Is it enough to really take the euro back down to 115, 116? What are your thoughts here about, the dollar and where we stand? I mean, is the market too bearish the dollar, or does the dollar deserve to be down at current levels?
Well, it's exactly as we were saying. It didn't look like a sell America trade wholesale because bonds weren't moving, stocks weren't moving.
Yeah.
And it's this has been confirmation. When has the dollar started gaining strength? When precious metals are crapped out. So that really tells you all you need to know. For all our surmising that there's money going into Europe and elsewhere because the dollar's getting sold or euros getting stronger, it looks like it's all come down to commodities, pure and simple. Because, as I say, the move down in the euro went hand in hand with the drop we saw in precious metals.
Yeah, so what you're saying here is that the move in precious metals really spurred some dollar movement there, but I want to take a step back really quick and let's have this discussion, because there hasn't been a lot, and you have to go back like in the last year, and I guess the euro would be a good enough candidate for this. I mean, you can see that the euro basically rallied the first half of 2025, it consolidated the second half of 2025, and then we started to get its move on, the beginning of the year. There hasn't been a lot that's taken down the euro, or in other words, has rallied the dollar. And is the poor positioning in precious metals, I say poor positioning because obviously everybody was long and everybody got taken to the cleaners. Even longs that couldn't get out are still stuck now at this point. So, with this move in precious metals, if they continue to move lower, which we're going to be up for debate. I'm going to get K-Man's comments here in a second about precious metals. But if precious metals continue to sell off, do you think that's a catalyst to drive the dollar? Do you think that we're really going to be a correlated move, or is there more to it than that?
I think that will happen in part. It's not solely the move in precious metals that's causing the dollar. There's always other things going on, the Fed and data and all that sort of stuff. We've got a big data week this week, of course. But you take it in isolation, if you know what I mean. So if we see, gold falling below 4,000, for example, if the dollar goes with it, then it's related. If the dollar doesn't go with it, like it has today and Friday, then that side of the trade is decoupled, if you like. And then we're trading other things. As you point out, the euros was strong since 2025 all the way through. So there's other factors why that happened, but just these sharp moves. I'm just saying it's coincided pretty closely. The fact that we've seen this sharp move low in metals and a sharp move higher in the dollar, lower in euro dollar. So I think, as I say, you got to take it in isolation. Start watching for that decoupling between the dollar and precious metals if they keep falling and the dollar doesn't respond as it has done the last couple of days.
Yeah, and that's the thing. And this is where now I'm going to bring K-Man in for this part of this conversation. This is where not all dollars are created equal, or not one size fits all. And that's where I think a lot of traders really struggle, especially in FX. They go, well, the dollar's strengthening, so I'm just going to buy the dollar. But you really got to be careful where you're buying the dollar, where you're buying it against, right, K-Man?
That's what I always say. Not all dollars are created equal. I think on what we saw towards especially the end of January, metals and FX or dollar pairs working together is not a coincidence, but it's just the size of the move in the metals that forced a dollar moves elsewhere, and then we had the trigger of wash nomination, just adding to the global dollar picture. So yeah, well, for me, metals they still have somewhat different fundamentals, so they can again start to move on their own. Obviously, if we're going to see, well, actually, we see today. I mean, excuse me, we had the dollar is relatively stabilizing in FX, even doing okay compared to Friday. But the metals had like a very sharp drop and then a sharp rally from the lows that the FX has not really participated in, right? So to me, it's they're still going to move at especially very different speeds and also quite different on the fundamentals. So I would still take them globally separate one from the other. Now, on your first question about the dollar itself, my more longer term view is still, my bias would still be there, but as I also said on the flow show to start this week, and as Ryan already mentioned, we have a bunch of data. Maybe some of the media could get wash in front of a microphone. So I'm a little bit reserving my view here, and I'm not. I'm going into this week with a very open mind on really trading dollars in FX.
All right. Well, okay. So unpack that a little bit. Tell us a little bit more how you want to trade the dollar.
As I said, I mean, if we see the data, and then I'm only talking data, forget about it, everything else. If I see the data still performing better than perhaps its peers in Europe and UK, for instance, Japan, Australia. I think the dollar could actually do a bit better to start the month of February. But then we will see. You know, I mean, I think there is a risk on the jobs front that the under the surface slightly worse picture than what perhaps Powell would have said last week about the stabilizing job market. I think there is a risk that there is another a drop of the cliff, and then I probably will start to trade my more medium-term bias again and sell dollars again.
Yeah,
Because
so
I
that's
still
that's the
think the
real
jobs
risk, and
jobs
I
are the
want to
most
highlight
important.
that too, K-Man. I want to highlight that you know you have a lot of people, and I say a lot of people. I mean, just people that I guess I follow on Twitter, which happens to be a lot. And then, you know, I was having a conversation yesterday with the folks at Ninja Trader Live, and you know, their head of macro is Craig Shapiro. And he's pretty bearish on the dollar. He's like I believe the dollar is going to strengthen, you know, quite aggressively and blah blah blah. And I don't agree if the data doesn't support it. And that's going to be the real crux of the whole dollar argument is, can the US data continue to outperform its peers? And let's keep in mind that we've had a strong US economy for quite some time. Everybody who's been bearish on the economy, think about all of your YouTubers that you guys probably watch, and all the, you know, just the bear camp that has been raising a ruckus literally since 2022. And here we are 4 years later, you know, they're constantly saying recession is coming and blah blah blah. They've been proven wrong. And is this month, K-Man, this the month that we actually start to see data, you know, turn?
We have seen small bits and pieces of it already, but not to the tenure that US economy is going down the drain. Far from the reasons why we are lowering the dollar has more to see with Trump's approach, Trump administration approach, the geopolitical approach, external policies, not being of the liking of investors, but yeah, that's why I'm quite open-minded, because I want to see those data. You know, if they are starting to confirm, and then especially the job component. I've been hammering on that for months, but I continue to watch, especially the jobs component. If that shows weakness, then I think the dollar will get another knock on the head.
I knew
But
you
I
were
want
going
to
to say
see the
knock on the
data
head.
first.
I knew you were going to say that. Hey, Mike, if you have questions about the RBA, we just had a big conversation in the general chat room in Forex Analytics. If you want, you know, answers, that's the place to get it. You know, you have questions like that, we address it right here. But we got other things we got to cook today regarding what's happening in the markets. And the RBA is kind of second fiddle until this evening. We'll be talking about that on all of our private shows a little bit later this afternoon. You know, as far as, okay, Ryan, I'm going to go back and talk to you a little bit about, you know, just continue this dollar conversation. You know, the euro obviously trading on its lows of the session right now. We have ISM manufacturing data starting right now. Do you think that the ISM data is going to be, you know, the data that really drives the market today?
Yeah, I think so today, because it's going to be an insight. I mean, obviously it's manufacturing, so it's, you know, it doesn't have the same impact as the services number, but you know, we're in NFP week, so we've got to look at the prices components, got to look at the employment components, because it's all going to build up to the Fed. And obviously it's all changed at the Fed now that Walsh is coming in. We've got to be standing by our beds in case he appears somewhere with some comments, because the market's going to take his first words pretty simply. Is he uber dovish or is he not? Is he going to sit down and start calling for cuts straight away, or is he going to be a bit more moderate?
Right,
So,
right.
Yeah, there's lots of risk this week, but ISM, as I say, going to be important for the headline if it's a big variation, but more so for the employment and prices components.
And that's right, Mr. Weissman. We're all still waiting. I mean, we're still waiting on that recession that's coming at some point, you know, sometime in the near future. I can't tell you how many people, I can't tell you how many people have their cycles that have been signaling a recession for the last 4 years, and I haven't seen a recession yet. I mean, it's just, you know, I mean, and let's all admit, you know, the U.S. economy has performed a lot better than anyone would have thought. But, you know, at the same time, is this the month? Is this when it all happens? All right, let's talk about these precious metals. I put in a I put in a poll for you guys in the chat. So you go into the webinar chat, make sure you guys vote for the poll here. The poll is, you know, will gold see 40 or 5,100 or 4,400? That means gold would trade to new lows. I wanted you guys to vote before I got answers from Ryan and K-Man here, and then they can tell us how they feel. And I'm gonna go ahead and I'll tell you guys how I feel as well. But you can see gold, technically speaking, we ripped. You know, we have this throwover, a false breakout of the channel. We slipped right to, and here's the daily chart. We slipped right to the, you know, bottom end, the lower end of the channel, the 50 DMA. It's obviously finding buyers right now. And by the way, just so you guys know, between silver and the silver move, and if you guys didn't catch it here with the patterns in play, I'll just kind of show you. The closed patterns in play, the Bitcoin, if you were watching the week ahead video, moved below 80,000, target 75,000, but we've had a short on Bitcoin on the bear flag pattern for a long time, so it's been out there for a while. But silver, we rallied from the mid 70s and to currently where we're at 81, but we went all the way to 84 on Friday. So those patterns in play were part of what we discussed on the week ahead video. So hopefully you guys caught some of those. But now the question is, you know, you're as a trader, you're only good as your last trade. So what have you done for me lately, Blake? All right. The question is, what do we do from here? Does gold break new lows, or do we trade back to 5,100, which would be the upper end of this previous channel that we're back in? So the question is, if you guys haven't voted yet, we're gonna get some answers from Ryan and K-Man. What do you think, Ryan?
I think we trade, well, just purely from your Twitter post, your poll. I'm saying 5,100 because it's only $350 away versus the $750 to your other level. So I'm going with the price. I'm taking the advantage.
Wait, no, did I say 4,400? I said 4,400, right?
Yeah, 44.51.
Yeah, that's about $350 here,
yeah, I was looking at
and $350 to the upside. So we're right in the middle. So what do you think?
Yeah, so I thought you said 4,000 on the post, but anyway, I've gone for 5,100 purely because I can see a bit of a bounce coming from here. But I think 5K is probably the more important level on the way up. If we hit our head there and can't get through, then that would suggest we're going to find a bit of balance. But that was certainly a decent hold down at the 4,400 level. So it's given us a bit of a marker. You've got a line there, I had a line there, K's got a trend line there. So yeah, there's plenty going on down there, and the price had to stop somewhere.
All right, so Ryan says we're going to trade up to 5,100 first before we trade down to 4,400. K-Man, what do you think?
Now then.
Come on.
Well, I mean,
let's put you. All right, gun to your head. What do you do?
The polls that are not initiated by me, I don't know the answer to.
I'm just asking. Just give us an answer, bud.
I think we are going to hit 4,900 before hitting 5,100.
This is a true statement.
Come on, man. I mean, I don't know. I think we are in a 44, 49 range. So I'm going to say 4,400.
Yeah, you know what? I actually voted 5,100. I do hope, and that's more of a hope type of move. I hope we trade to 5,100 before rolling back over. But my fear is this false breakout right here is going to leave us a move to, to the 200 DMA or 4,000 first. I voted for 5,100, like I said, out of hopes. I hope we make it to 5,100. In other words, if we make it there, I think it's a great short. I'm fearful that this move was so big and so massive that we're gonna see sellers ahead of 5,000. And whenever you look at a price target, there's a really strong chance that you don't make it and you just fall short of it. So in this case, I do believe that we're still bouncing. I just don't know. I think everybody's going to be selling ahead of 5,000 or around 5,000, and it's going to lead us to a breakdown. Again, I voted for 5,100, but I'm fearful that it's not going to happen. But man, it has been hell of a move. And I think silver is actually the one that's more at risk at this point. But you can see, we're at a 618 retracement of the 2025. We held the 618 of the 2025 lows to the highs. And then if you go back to 2022, back over here, I have to go all the way back, but it's a 50% retracement of the entire thing going way back over here, which is crazy if you think about it. There's your 50% retracement. Silver got such the snot beat out of it that I feel that it is at risk. And for those of you that want to reload, and if you can reload, you might get your opportunity below 60. I think that's going to be the level that everybody can just say, hey, if you're a long-term believer in silver, there's a story going around that banks are insolvent. They can't they're short silver and they can't cover, and they've been pushing price higher to try to get out of these short contracts, and it's JP Morgan's been in the rumor mill surrounding all of that, and maybe insolvency coming. I don't know. I just all rumors as far as I'm concerned. But man, I'm hearing a lot of murmuring about these moves have done a big number on some of these banks, some of our big U.S. banks. You guys heard anything like that? Ryan came in.
Horseshit, more horseshit. That apparently JP Morgan was going bust when the price was rallying because they were short, and now it's come down. They're going bust because it's come down. So you've got to remember, and this is what people really learn or don't know, is that banks very rarely hold positions. They will hold positions for their customers, but they very rarely, if at all these days, actually take positions in the market. Not to the, and particularly to a level where they'd be financially at risk if it went pop. I mean, the Fed and everyone else didn't put all the Basel II and the MiFID and all the rest of it into play to allow JP Morgan to corner the market in silver.
Right, and that you make a great point. I was talking to this gentleman named Pax, and on our Sunday show on Ninja Trader Live that I was a guest on this Sunday. Which, by the way, it's not surprising, and it's not because of me, but it had the record amount of views on Sunday. And all of our videos are getting a lot of views because obviously the markets are moving right now. Volatility is at a peak right now. So as a result, we were talking, and he's like, if you ever gotten the shoulder tap, and I've had the shoulder tap, and believe me, and a shoulder tap is when you're discretionary trading for an institution, and somebody goes, you got to take down your size. There's risk managers all over the place that are monitoring the positions that you are in. K-Man, I'm not sure if you got an opportunity to do any discretionary trading for the bank that you were trading, but getting those taps, that's not a fun situation when somebody taps your shoulder. K-Man, you have any thoughts on these moves?
About solvency, etc., it's probably complete bullshit because they all have risk limits, and yeah, they can go to the edge of the risk limit, and there's always some real events. What I do believe is the short gamma story, and yeah, that's an issue. If it rallies, you have to buy. If it dumps, you have to sell. That's exactly what exaggerated all those moves, whether it be to the top or to the downside for especially gold, but I trust silver as well. But they would all have been trading within risk limits, and whether it's the option desk or the cash desk, I wouldn't worry too much. Yeah, maybe somebody busted his limit, and then he will be get sacked. But I don't think that J.P. Morgan will ever go insolvent because of a precious metals move. Because they all have limits. We all had limits. I mean, whatever those limits may be, if you stay inside, that's a risk that the bank is willing to take, and the banks are not going to risk solvency on one instrument. I think if there would be a solvency issue or whatever coming up in any of the big banks, rather look at the bonds or maybe even equity markets or so. If there would be a black swan event, that those positions are massively bigger than what
Yeah, and
they could ever be in precious metals.
right, and you guys have to imagine like when like Lehman went down and
Bear Stearns,
what I'm sorry.
Bear Stearns.
Yeah, and Bear Stearns, excuse me. Yeah, and the financial crisis hit, and it was a mortgage because it's because banks didn't have like they didn't understand the risk there.
Oh, they did.
Well,
Yeah, they did.
Oh, they did.
They
No,
just
but-
tried to flog it to everyone else.
But there wasn't as much of a way for them to monitor risk as mortgages are not a liquid, type of investment. And so, either were mortgage-backed securities at that point in time.
Mhm.
And so silver and gold and positions that you see here, banks know where the liquidity is, how much liquidity there is, and how big the markets are to assess risk at any given time. When you were talking about mortgage-backed securities back before 2008, there wasn't even a way to be short mortgage-backed securities. So that was like a risk they saw it, but it wasn't quantifiable from a risk management standpoint. Anyway, it's a much different situation that we're in
It's a
now.
different,
And
yeah.
and people love to put drum up stories and blah 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 and try to freak everybody out. But when you're talking about silver and gold, it's been traded. Those are instruments, and on all these precious metals, been traded for decades and decades and decades before you even set foot on this earth. Then don't get freaked out about that kind
Yeah,
of
and
stuff.
also there's a lot of different risk parameters which have been put in place, the Basel III and all those kind of things. Banks don't even if they lose 1 billion, 2 billion, whatever, it's still not going to it's not even going to cost them a quarter revenues. I mean, even if they have a very big accident, and let's also not forget that when those banks, and assuming that everybody's talking about the gamma negative side because that is what sparked all those parabolic moves and very very sharp descents. They first of all, somebody paid them money to have those options on the books. So even if they lose money on the way up and on the way down, they still got premium to lean against. And even if they lose 2 or 3 times the premium, I mean, they're never going to be in danger.
And if you think JP Morgan's going pop, then don't worry about trading gold and silver. Go and sell their stock $30 off their current all-time highs.
There you go. There you go. There you go, Ryan. Hey, we're going to be wrapping things up here in a second. Jim, the thing about the conversation with Pax, because you're asking, is just we were just talking about there was a lot of tapping on the shoulders on Friday, like get out of your positions, get out of. There was a liquidity event, and that's just the point I was trying to make is. you know, for those of us that have been in those situations where you get the tap and you're like, okay, I have to liquidate right now. I'm being told I need to liquidate right now. And that shit actually does happen. I want to talk a little bit about the S&P that's just kind of pegged at these highs. I think if you guys, I just showed you there's some earnings that are coming out. We'll go into those in 1 second. But if you see this, like, this is a very small, very tight channel. Just watch for breaking new highs or breaking new lows. We're wound up. We're gonna be moving here soon. Volatility is gonna pick up at some point, and so just be really careful when we do break. It should be a pretty good break. Now, we do have some earnings this week. Like PLTR is today after the close. I want to show you guys this stock because this is something we've been talking about in the Forex Analytix community. If you go into the S&P room, but I want to just show you what the chart looks like. It's a big head and shoulder pattern. And this has been one of those that, you guys ever watch the CEO? He's a freaking numbskull. I mean, he's obviously not a numbskull. He's probably very intelligent. He's a weirdo. How about that? He's like, you know, he's almost like that old T-Mobile CEO, just a real eccentric dude. But just watch the stock, because if we start trading below like 140, it opens up a lot of downside there. So just watch PLTR. And then we also have a couple other big earnings this week. We have Google, obviously that's going to be on Wednesday after the close. We have Amazon, which is going to be, you know, Thursday after close. If you guys are crypto people, MSTR is going to be a big one Thursday after the close. So make sure you keep an eye on some of these earnings. We're still in earnings season. It's going to be a big one. Ryan, last minute thoughts before we wrap things up today.
One thing we've got to keep an eye on is temporary shutdown, just in case it's not temporary. That's still, those wheels are still in motion. So that's something we need to keep an eye on. Assets wise, euro dollar's continuing to slip. Keep an eye on dollar mex as well. We had a little run up, quite a strong run up above the 1740, but it's now glued to it at the moment. So that might be a bit in danger.
Yeah, I mean, this is this you know, big move lower. I don't know what to do with the dollar mex right now. Obviously, if the market was really worried, we would see a big move higher. We'd see a squeeze higher in the dollar mex. But with, you know, S&P is pegged to basically the all-time highs. It's hard to get really bullish the dollar mex. However, if stocks do roll over, the dollar mex, I think, is ripe for a ripper. You know, like a nice squeeze back to the 200 DMA somewhere up here. K-Man, what are you thinking?
Today, well, US ISM maybe a little bit. But I'm going to keep a close eye on what the RBA says, because if they really hike rates, I want to know what Bullock is thinking, if she already communicates on the back of it. I haven't given up the bullish idea on the Aussie Kiwi because they are going to create enough interest rate differential. But watch out for disappointment sales. But I'm still, providing that they hike, of course, and that she doesn't go all dovish afterwards. I still think Aussie Kiwi could be in for a little bit of a bounce. It came off because Aussie obviously pegged to or paying much more attention than Kiwi to commodity sell-offs, gold sell-off even, etc., etc. But yeah, it looks like we are stabilizing a little bit on that Aussie Kiwi. For the rest, no.
And this is and K-Man's about ready to go through another 17 things that he's looking at today, but this is his analysis that you could read right here in European trade. So
not going to go through 17 other things, don't worry.
All right. Well, with that being said, I want to say, guys, Ryan, K-Man, if you guys aren't listening to these two guys on the Flow Show, you should be listening to him in the morning. I listen to him every morning to get up to speed. At least I try to. Most mornings, I'd say 90% of the time, I'm listening to these guys as soon as I get up, and I can go back and listen to the recording right off of YouTube or off of X. So make sure you guys are doing the same. And this week, by the way, we're gonna have to hear from Deerpoint Macro. He's going to be coming on Wednesday, and then I have Reuters Jamie McGeever from Reuters. He's coming back in on Thursday because he couldn't. We crossed wires last week, so he'll be back on Thursday. So we're going to have some interviews for you this week. I just want to wish you guys all a great trading week. For those of you in the Forex Analytics community, we're going to see you on the Morning Edge in about 40 minutes from right now. And Ryan K-Man, thank you guys for joining us, and thanks for all of our viewers as well.
Thank you.
All right, guys, have a great day. We'll catch you on the F.A.C.E show tomorrow morning. So we'll see you there. Bye-bye.